Hello and welcome to Scrolling with Ceazor. Today is May 22nd, 2026. Now, I spent a lot of time going through X today and found very little significant news. Most people are still, talking about ETH and Bankless and Hoffman selling his ETH bags. We talked about that yesterday, and I don't really want to get into it too much today, but that's mainly the main idea. Now, I do have some tweets that I've selected to kind of show you, and you can kind of look at these a little bit deeper and find out if that's interesting. The chart's looking all red across the board. Hype is down 1%. As you can see, it did recover back some of that pump yesterday. There's a new range probably around here. I don't think it's going to come down to even close to this, but I don't know. You never know with these kinds of things. As always, take some profits if you are holding hype. All-time high is usually a good time to sell some of them, but obviously you don't want to empty your clip because there's potential to go up even farther. Okay, so taking a look at that, Sonic is looking, pretty dreadful as well. Ethereum is looking like it's kind of sitting around. It's quite quiet for the past few days. It might be a good time to open a long, a leverage long. I'm not exactly sure. It doesn't really, there's no lines of resistance. There is kind of this one, but it's still below it. It might bounce off these numbers here. So I'm not sure. I wouldn't go too heavy, but I'm still thinking about it and looking at it and wondering if it's time to do some leverage buying. I would buy spot here and put it to work. That would be a good place, I think, to buy some spot and get some APR on it. Stick it into an LST or lend it or Volt or something like that, or even put it into some sort of concentrated liquidity position like I have here. Okay, so that's it for those. As you decide what you want to do with your money and decide if it's a good idea. I'm not sure. ETH could come down. It could keep coming down. I've got some buy orders way down here, but I don't know if it's going to get down there. But anyhow, there's that. Let's move on to the tweets. So the first tweet of significance is some guy named Matthew. He's got 300 followers. Somehow he has written this article on exposing how ZachXBT is kind of a little bit corrupt. He's got his picture somehow, and then he's talking about these different people who have donated to ZachXBT, and as a result, ZachXBT has not, said bad things about them. So I don't know how truthful that is and all that, but there is quite a few mentions of people in here who have donated to him, and basically what he's accusing of happening is they bought his silence. Okay, so anyhow, there's that. Let's move on to the next tweet. So I looked at this yesterday. So Yield Basis has a version 3 pools coming out. The major significant difference is basically when the pools when there are withdrawals and large deposits and stuff like that, it's not going to have such an impact on the ratios of the pool, because if you are an LP on Yield Basis, then you probably know this, but some people who don't know, I'll kind of give you a quick little explanation. If you are an LP on Yield Basis, then there's the possibility at times where if you want to withdraw, you'll be at a loss, sort of like impermanent loss, but it's not quite the same as impermanent loss. It's kind of the opposite of impermanent loss. But basically, there are times when you can't withdraw because you would lose money. But then the pool eventually rebalances and goes back to equilibrium, and then you can pull out without having any losses. So it's usually when things dump, or BTC dumps quite a bit, or there's large withdrawals and stuff like that. So they basically fixed that with making those pools less impactful. So there's less impact on the pools, and as a result, LPs will be safer. They can then test it for a little while, and then add some more capacity to the pools and slowly grow them in a controlled manner. As you can see, it all happens through governance, and you can vote on it and stuff like that. So yeah, you can check this out. I'm a little bit biased on this because I do hold bags of VEYB, so I want to see this thing succeed. Okay, so Temple Fund was a project I retweeted a little while ago. I think I mentioned it on the podcast, but there's a long article here of ideas that you can do with this Temple Fund thing. I haven't read through this completely. I kind of skimmed it quickly just to see what it is, but there's a lot of opportunities here, or chances to have some fun with this project and so forth. So I'd suggest you to check this out. They did run a little game. And basically they put some money in a treasury and they said convince the AI bot to give it to you, and somebody within one day convinced the AI bot to send them the $500 or whatever it was. So that was just one kind of example of what you can do with this thing. So check it out. I want to support new projects and get some more ideas on the table, and I hope that it'll help to grow our ecosystem and give people something interesting to do. I'm going to look through it and talk to the founders and see if there's something I can do on this thing, but I don't know. Okay, moving on. Here we have Privacy Pools is retweeting Ambre Wallet. So the Ambre Wallet is apparently going to add private transfers to the wallet. So it'll use Railgun and Privacy Pools built into the wallet. So that's pretty cool. So then users don't have to go to Privacy Pools. They don't have to look for Railgun. They don't have to, Railgun's pretty difficult because they don't have a front end and you have to use one of the wallets that has integrated it. But it's pretty cool still. It's still a cool project. So Ambre is going to kind of put this feature into the wallet itself. So then you can kind of just do this stuff on the wallet, which would be pretty cool, I think. I still like to kind of use Privacy Pools myself manually, but I still think it's pretty cool that they can integrate and just kind of give you this feature in the wallet itself. Okay, so I tweeted this out yesterday about FlexMeow. Now, FlexMeow is a choose your own fixed rate loan platform where you can borrow assets versus other assets at a selectable fixed rate. Now, I do have a video on this if you want to know how it exactly works, so you can go read the docs. It's a small little project built by the Yearn devs, and it's kind of right now funded by the Yearn. So Yearn has put, I don't know exactly how much, but maybe 1 million or something. So there's $800,000 right there ready to be borrowed. And you can borrow it versus YVUSD. So I don't know if I have it anywhere here. Yeah. So YVUSD is a Yearn Vault token. So you can take your interest-bearing stable coins and you can deposit them into this lending platform, select what interest rate you want to pay, and borrow USDC versus that interest rate, and then put that USDC back to work. And you can loop this up if that's something you want to do as well. So check it out. There's quite a bit of liquidity. This was tweeted out yesterday. So 862,000 USDC waiting to be borrowed. The one risk is that if this gets completely depleted and somebody is willing to pay more than you, then you might get redeemed. So you kind of have to select your interest rate based on what you think is a good one, but at the same time, when there's tons of liquidity like this and very little usage, then you don't have a huge risk of being redeemed. You can put 0% if you want for until this gets down to 20K or something like that, and then start increase your interest rate to something that's more protectable. Okay, moving on. Okay, so here we have Shankitakara. Let me see what it says. We're aware of the security reports and linked to the reports payout, and users of the market resolution are safe. So what is this talking about? So this guy here works for Polymarket. So Polymarket has apparently had some sort of exploit or private key leak, and the people have started to take some money from it. Now, as you can see, the markets are safe. The user funds are safe, but the private key somehow was able to extract some money. So we don't know exactly what's going on yet, but they are pulling money out of contracts. So it's not like just like a treasury like heist, right? There's actually being money pulled out of contracts. So I check into that. If you do have money on Polymarket, I would consider it and think about that. I'm not saying you should panic and run. They say everything's safe, but you should at least take a look at it. Okay, Abdul is talking a little bit more about this exploit and the Polymarket exploit, and he says that because that private key was taken, it could have been much worse than it was. Instead of just stealing some of the tokens, what they could have done was they could have let's go through what he says here. It could have bought large positions in some markets, flagged them as manual resolution, waited the 1 hour safety window, and then called resolve manually to resolve the markets in favor of their positions. So they basically took over the oracle, as it kind of sounds, the resolution oracle. So what they could have done is, they took over the admin to change the oracle, right? So what they could have done is they could have bought a whole bunch of crazy positions that were very unlikely to happen, and then resolve them as happening. And that could have been quite big, because there's $500 million of open interest. So they could have selected some really juicy markets. Now I assume that this exploit vector has been plugged and is safe, but that is a scary thought for sure, and that's just a bad hacker, just a hacker who just didn't have creativity or a wide understanding of what the powers he was taking over could do. Okay, so Frax Finance has dropped a large article here. You can read through the whole thing if you want, but it's basically just a reminder that how important security is to Frax Finance. Frax does a lot of trying to grow their stablecoin, spread it to many places. They do incentivization campaigns with partners. They do social support for their partners as well. However, they do want to remind you that they do take security very seriously, and there are many audits and a lot of history of working with projects, understanding things, building in the space, and so forth. So you can read through this article and get a good idea of what it's all about. So the last tweet for today is Bojan from Liquidity Protocol, the Bolt stablecoin. Gotta love it. He's just kind of shilling out that he built this rate comparer thing again, and just sharing it out as well again for you to check out. If you do have active positions where you are using collateral, ETH or WSETH or Rocket ETH to borrow some stable coins or mint some stable coins, you can check out this rate comparer app, and you can see that you can pay significantly less interest if you borrow Bold instead of borrowing whatever it is you're borrowing. So I double check it, click on it, plug in your wallet, see if you can save some money. This guy here, Nicola, I guess his name is Nicola.eth, but I don't know. But Nicola is paying $300,000 more a year than he has to if he just used Bold. Okay, so anyhow, that's that. So I hope this has been interesting and useful, and thank you for listening, and goodbye.